Welcome, viewers, to another episode of Purple Ponderings with Pankaj. And today we have Sean Harper from Kin. Very happy to have him, as he's also a fellow Chicagoan. Sean, welcome.
Thank you. Thanks for having me.
Fantastic. Sean, so for those people who may not have heard of Kin or and don't know you personally, do you mind taking a few minutes and just sort of giving an introduction and some background to yourself and your company?
Yeah, Kin is a technology company that operates as a full stack insurer. We're one of the few insurance tech companies that have done that, where we control our customer acquisition, we control our technology, we also control our own balance sheet. We're also unique in that we only operate in areas that are catastrophe exposed. And of the $100 billion U.S. home insurance market, about 40 billion of that are hurricane and flood exposed, and about 10, or a little bit more than 10, but growing really fast, are wildfire exposed. So it's actually about half of the market is cat exposed, catastrophe exposed. And a lot of the big well-known carriers are either not operating in those markets or trying to leave those markets. We think that our tech gives us a big advantage, especially because we're able to use a lot of data to target the customers and homes that are more resilient to the weather. And so we really only focus on that half of the market, which is a little bit counterintuitive. And we've been doing this for a little bit, but it's actually like 3.5 years now. And we started as just a tech company, and then we became an MGA. And then this last summer, we formed an insurance company. And that's Kin in a nutshell. We're a little bit more than 100 people. We're located in Chicago and in St. Petersburg, Florida.
Fantastic.
And we're growing very fast now.
Fantastic. And congratulations. I just want to let everyone know that Kin did close a recent round of funding, right? That was your Series B, right?
Yeah, we closed an interesting transaction this summer. It was like a 3-part transaction. It included a pretty small equity raise, about $10 million, and a surplus note raised, which is about $35 million. That was to create our insurance entity. You need an initial capitalization to start an insurance company. It's one of the hardest things about starting an insurance company. And then the third thing was we got regulatory approval for the insurance company, the Kin Insurance Network. And so we did that all. It was announced in July, which is about when we finished it. And yeah, it was very exciting.
Yeah, fantastic. It's a amazing journey that you're on so far. It's, what's fascinating is that you talked about starting as a tech company, then moving to an MGA, and now you're a full service carrier. If I may ask, this seems to be, at least not the, this journey seems to be one which a lot of the insurtechs are now sort of following up. What do you think is driving more a lot of the insurtechs to just go on this a similar journey?
I think the biggest is just the need to move quickly. So for us, there were three reasons why we needed to make the change. And the first was we needed control and stability. And as an MGA, or even worse, as a retail agent, you don't really have any control or stability. You can sort of get turned off whenever you want. And for us, we're investing tens of millions of dollars in our lives. There's a big opportunity cost there. We really can't afford to get turned off or have the deal renegotiated or have to change. We need stability. The second is MGAs are very expensive. So to operate as an MGA, we believe is 6 or 7 percentage points more expensive than operating as a carrier, which is, it doesn't sound like that much. I was like, oh, it's 5 or 6%, but actually it's huge, because of the 100% that's available, 70% in home insurance is spent paying claims. So the other 30% is the addressable expense ratio. So a 6% increase is actually that's a really big deal. It's like 20% added to your cost structure.
Right.
It's especially important for us because a big part of what we're doing is making insurance with a lower cost structure. So for me to pay an extra 6% is actually more like a 60% increase in my cost structure, which is not good. And then the third one, and this is really the most important, but maybe the least obvious, is we can move very fast. Our tech allows us to move fast. Our marketing, the way we get customers, allows us to move fast. The analytical capabilities on our team allows us to move fast. And having a legacy company or even multiple legacy companies involved in our day-to-day decision making, where we have to go and ask them permission basically if we want to try something new, makes it really, really hard to deliver on what we're trying to do. So those are the three reasons. It's obviously a huge investment, so we thought really hard about doing it before we did it. But in the end, it's worth it. It's been sort of night and day between before we had the carrier and now. We're just moving faster. Our unit economics are a lot better, so I can spend more on marketing. And we're able to solve problems for the customer that we just couldn't solve before.
Got it. Got it. I guess the other part of the cost angle that you mentioned is now you can pass it on to your customers, right? So the value prop also improves, I guess, for them too. That way. So awesome. So this podcast is all about while we talk about IoT and its impact and its use within insurance, I kind of broadly also look at all the other emerging technologies as well, right? And you could imagine in the insurance world, I'm going to say artificial intelligence, machine learning is also emerging technology, even though in the I guess the regular world they may not see that. But just wanted to have you just talk about from your perspective, because you're not from the industry, right? You sort of started Kin, if I understand correctly, without having an insurance background, right? So you came in and you made a big impression, but technology is behind or is the foundation for what you do. So just talk to us a little bit about how you think about all these new technologies that are coming at us so fast, and how is it that you're able to deal with that in a way that's beneficial to both you and your customers?
Yeah, so Lucas, my co-founder, and I started. We are new to insurance. Well, long ago, when we were management consultants, we did a lot of work for insurance companies. We never started an insurance company or run an insurance company, but we had started other financial services companies. So my last one was a payment processor, and actually the way these industries operate is pretty similar. Like if you look at lending, if you look at payments, if you
That's
look at
true.
insurance, there are many things that are different, but there are also a lot of things that are the same. And I think that to the extent that some of those other industries have actually evolved a lot faster, like payments is a great example. It is the fastest moving area of fintech. It was sort of the original area of fintech.
Mhm.
It creates a really good roadmap for insurance to follow. And so one thing that got us really excited about this was doing something in a new industry, but one that had a lot of similarities to an area where we had been successful before. The other thing that's kind of cool is this is an IoT podcast. So Lucas and I actually got excited about insurance because of IoT. And we were doing this interim gig where we were running product and engineering for after we'd sold our last companies. We were running product and engineering on an interim basis for Brinks Home Security, which is one of the biggest home monitoring companies. And we were just looking at it, we're like, gosh, if you really did the gear right, you could actually, it seems like you could prevent a lot of bad things from happening to your home. Like there's got to be an insurance angle here. And we looked at what the insurance companies were doing. They're giving maybe a 5% discount or something like that. And it just it wasn't enough. And so that's what really got us started noodling about home insurance. So that's why we eventually started Kin.
Got it. So it looks like obviously IoT was of interest to you. So what's your perspective now, and how does it? Do you use IoT in your current operations? What are your thoughts there?
We are very optimistic about IoT. And really not just IoT. We believe that there will be a rebundling that happens in that historically insurance you bought all your insurance that you needed from an insurance company just because they happen to be an insurance company. But really, the data and the expertise and everything that you need to do pet insurance versus home insurance versus renters insurance versus auto insurance is totally different. Cars and homes are not at all the same. They're completely different. One rolls around and the other is in one place. Uh, so I think that what's going to happen is you're going to start with guys like us who become very good at doing just home, for example, and then we'll begin to bundle in other products that aren't other insurance products, but that are really relevant to the home. And that's where I think IoT starts to come in because, first of all, there's a huge marketing cost that IoT companies, especially the sort of more legacy and monitoring type companies have, like APT, for example. And there's also a huge marketing cost that comes from insurance. There's also a huge marketing cost that comes from most home services, tree trimming, for example. Half of the cost when you get your trees trimmed isn't the guy on the ladder. It's all the overhead and marketing and stuff that goes into getting customers. It's the Yellow Pages ads. So I think the future of home insurance, if you fast forward 5 years from now, is it's really much more of like a fundamental part of owning the home, and it takes care of lots of things for you. It takes care of fixing things when something goes bad. It takes care of making it easier to have maintenance done. It takes care of monitoring your home to make sure bad things don't happen. It takes care of, who knows, maybe it takes care of filing your property tax appeals. And it's really more of an important part of the home. And you'll ask at the end of the day, like, do you have kin with your home? Oh, no, you don't have kin with your home? That's crazy. Like, it makes your life so much easier in so many different ways. It's much more than just insurance. So that's sort of where we're aiming. And IoT is really exciting because, it's there every day with you in the home, which home insurance isn't, right? Like, we hear from our customers, I don't know, once a year maybe. And to have that permanence of an interaction, I think would be really nice.
Yeah, I think one of the things that excited me, especially to get into the IoT part, was this whole new proposition where you could engage with the customer post them buying the policy or renewing the policy and pre-claims, right? So between those two events, there was really just no reason for anyone to engage. And I think the opportunity for an insurance company to now be positioned as a service provider, right? Property service provider, for example, in the home case, is a very interesting one.
Yeah, but it's a really hard one because if you look at your average insurance company in the United States was started sometime between 1900 and 1930. And the world they were not built for a world that moves as fast as this one does. Our world moves increasingly faster every year. Where people live moves faster. People are moving more than they ever have before. The weather is changing faster than it has before. As we warm the surface of the planet, technology is moving like crazy. It's moving so fast that the speed and capability and ubiquity of IoT devices is decreasing at a really, really fast pace. So I think it's going to be really hard for a lot of insurance companies to do that. They don't see themselves as service providers. They see themselves as managing a balance sheet.
Which is where I think that's one of the advantages, I guess, I see with a lot of the insurtechs, right? One of the reasons why a lot of companies like yourself have taken off is because I think the customers, right, the end customers, the homeowners, the car owners, individuals, I think, are looking for a different experience, right? And they have different set of expectations for the value that they've been receiving so far. Um, I got a. This is a complete segue, and this was not planned, but I want to ask you. There is a conference every week about insurtech and insurance. The part that fascinates me is that all of them, and no matter who is doing it, whether it's as 50 people or 8,000 people, it's sold out. And yet we see the incumbents, especially, like the pace of change is still not as much as we would like to see, right? So how do you explain this from your perspective?
They're separate but related phenomena. Um, Insurance tech is huge and will become increasingly huge because insurance is huge and everything is tech. Insurance is a huge part of the GDP of the whole economy. Insurance makes up a shockingly large percentage. And every industry, whether it's autos or airplanes or apartment buildings or food or insurance, is getting impacted by tech. Like you can't like the highest market cap auto manufacturer is now Tesla, tech company. You can't escape it. So that's why the conferences are sold out. Why there's so many is because still insurance under indexes. Its share of like investment dollars is way less than its share of the GDP. But incumbent like innovation is never pushed by incumbent providers. That's not their job. Their job is to be stable. Their job is to keep doing what they've been doing for 80 years. It's very hard for them to change, and it's not what they're good at. So capitalism works best when you have free entry. It's actually the only time that capitalism works. And the reality is it's too hard to start an insurance company. It took us a really long time and tens of millions of dollars to start what is still a very small insurance company. So you need, if you're going to have real innovation, you need competitive forces acting on the industry. Otherwise, there's no reason to change. Just keep doing it the way you did it last year. It'll be fine. You'll still make money. And so I think that we all need to look at ways that we can create the infrastructure, tech, financial, and legal to enable, to make it easier to start an insurance company. And if we do that, then you'll see the industry actually really evolve fast. Even now, it seems like there's a lot of activity going on, but home insurance is a $100 billion industry. And you have 3 meaningful VC-backed companies that are doing anything at all related to it. And a handful of other ones that didn't make it or haven't made it yet. You should see, I don't know, I think you could see a 10 every year getting started, and it would still be fine. They'd all have their own angle, and it would be really healthy for the industry. Not everything would work, but we'd learn from the stuff that doesn't work, and it would actually create a really healthy pressure on the incumbents that doesn't exist right now.
Got it. Yeah, the power of status quo is just too strong right now, even though I think they're thinking about it and coming to these conferences. So, if there was one thing about making IoT or the connected home, sort of mainstream in the industry from your perspective, like one barrier that you could magically with superpowers remove, what do you think is the one thing that would make a big impact?
I think that it should be that you should not need as much capital to start an insurance company. And I think that the requirement of an insurance license is really problematic. If you are backed by a sufficient amount of capital and by a sufficient amount of reinsurance, you should be able to get an insurance license more or less automatically. It took us a year to get licensed, and that was actually, as a carrier, getting licensed as an agent was easy. It took us a year to get licensed as a carrier, and I do think that's too long. It creates this really problematic situation where there aren't that many investors who want to back you to sit around for a year and wait for a license to come through.
Got it. So availability of capital. Yeah, that I guess that goes to your earlier point too, right? That from 3, maybe the industry could easily go to 30. New insurtechs kind of coming in and challenging the incumbents.
Yeah, I think so. And I think the regulators in this industry do a really great job of looking out for the consumers. That's awesome. And I do think sometimes they get caught. They don't take enough consideration of the side effects. Like you want to regulate heavily because you want the companies to come to be stable and durable. But if you make it too hard to get started, then you never get the incubation, you never get the competitive forces that keep everybody else honest. So I think there's probably a different way to do it where you have a lower bar for very small companies to get started, and that allows them to innovate on a small scale. And then as they grow, you could have increasingly strict regulations. I think that might be something along those lines might help.
Got it. Cool. All right. In your journey so far, if I were to ask you what's been your proudest achievement and also the biggest learning over these last 3 to 4 years, what comes to your mind?
This is a boring answer. I'm really proud of how much our customers are happy with their service. If you go and look at our online reviews, they're nearly perfect. And the name of the company is Can. It's named after family. Like, this is something we take very seriously. We want to treat our customers so well that they consider us, like part of their family. And if you go look at most insurance companies, their reviews are not very good. And so I'm really proud of that. It's early days yet, but we're committed to having every customer be really happy with us and want to stay a customer for life. So that's what I'm proud of. Things that I learned. I've actually been really, so one thing I learned that may be surprising is that when I started this company, I'm 39, so I'm like borderline millennial, and I started this company pretty sure that I was starting it for people my age and younger. And it turns out that the average age of our customers is in their early 50s. And a lot of people find that surprising. It probably shouldn't be surprising because that's actually the age of a homeowner. That's the average age of somebody who owns a home. It's like early 50s. Well, there aren't that many 20-year-olds that own homes, obviously. That's not what they're doing. They're in college.
Yeah.
The other thing that I learned along this is actually like older people all use the internet all the time for everything. Like, my dad is a good example. He's in his mid-60s, and he's just a sort of normal guy. He's never been to his bank. And he doesn't understand why there are 3 State Farm agencies literally on his street in his town. That doesn't make any sense to him. So yeah, that I found really surprising is the demographics.
Yeah, I think it's a little bit of a counterintuitive too, right? If you think about it, hey, 50, so maybe not that tech savvy. But if you think about it, what you and people like you have done is you've used technology to make it really easy, right? That's what it is. It's just now so easy that even a 50-year-old person who maybe is only on internet because they're on Facebook, right? An app that my kid tells me they cringe when they talk about Facebook.
Yeah, no, that's definitely part of it. Like, it is hard. Like, it takes a lot of tech to make it simple. If you look at like the online insurance from like 10 years ago, like the early insurance site, it was like questions and questions and questions. It was so complicated, nobody would ever do it. So that is part of it, is us getting better at making things easy. But the other thing is, like, people in their 50s, like, find me a 60-year-old that doesn't have a Vanguard account. Like, good luck. Everybody has a Vanguard or Fidelity account. Whether they're 60 or 70.
Yeah.
Maybe not if you go to the 90s, but this is just a thing that people do. They transact online because it's easier. The other thing is, like, older people actually know more, right? So, like, 55-year-old shopping for home insurance, he's like, yeah, I know exactly what I need. I'm looking for this, I'm looking for this, and I just want to get it. Like, I don't need some guy explaining it to me. I know what I want.
Yeah. It's a great point. All right, so we're now coming towards the last part of our segment, which is knowing Sean a little bit more. So let me start with asking you, what do you read? Right, I know you're working super day and night, but the publications that you read, podcasts, books?
Yeah, I read the news just like everyone else. I really like reading sci-fi books. Usually, if you see me reading a book, it's not about business stuff. I do that all day. I'm trying to think about other stuff that's not my day-to-day work, and I love sci-fi because it's really good at imagining what's possible or what could be possible. I think if you look at some of the sci-fi books that were written in the mid 1900s, like a lot of them actually were very prescient.
Absolutely. My favorite show growing up was Star Trek. And I, even to this day, whatever we saw in the 80s, which was futuristic at that time, was all come true, right, in 30 years. So
A lot of it, yeah.
it's all, except for Beam Me Up, except for that part, everything, speaking on the watch and communications. I mean, all of that has been proven to be, yeah, it's all, they all had that foresight. Cool. Who is there anyone that you think you would want to hear from on this podcast?
Oh, that's a good question. I'd be interested in hearing from the like somebody from like Nest or from Apple HomeKit. I think that would be really interesting. The IoT groups at the big platform companies, how they're thinking about it.
Got it. Yeah. So basically, the Apple HomeKit or the AWS guys, right? So they keep coming up with protocols as well as Nest or Google. All right, got it. All right. So with this very last section, Sean, what I'm going to do is this is my favorite part, just having some fun. I'm going to take and give you two options, and you're going to decide and tell me which option you like and why. So starting off with baseball or football?
Football.
Why?
I'm a football guy. I don't. Lucas, my co-founder, is a baseball guy. I'm a football guy.
Okay. Well, Superman or Spider-Man?
I like Spider-Man because he's a scientist.
Okay, got it. World CrossFit Games or Ironman?
CrossFit. Sorry, I got a phone. CrossFit. I'm addicted to CrossFit. I love it.
Got it. Yeah, you could have easily, you mistaken for a guy from Iceland, right? So I watched some of these World CrossFit Games, and it's just amazing what that country brings, and you look exactly like one of them from that country. But all right, paper books or ebooks?
I only do ebooks. I read them on my phone. I just like to carry a lot of stuff.
Got it. Iron Man or Captain America?
Iron Man, same. He's an inventor. I love the inventors.
Yep. Scarlett Johansson or Penelope Cruz? This is my favorite part. I want to know.
I'm gonna stick with the superhero thing, and I'm so excited about the Black Widow movie. So I'm gonna have to say Scarlett Johansson.
Got it. Cool. Well, that's about it from us, Sean. This was fun. This is good. Good exchanges. Are there any last words you want to share with our viewers?
No, I can't think of anything. Thank you for having me on.
Fantastic. Thank you, Sean. And all right, we'll see you again on another episode of Purple Ponderings. This is Pankaj signing off.